Welcome back to the Synergistic CX Podcast. This is part 2 of our 3-part episode where we're focusing on the customer experience in the banking industry. We've got our special guest, Kerli Zeiger Soosaar, CEO of Dive Group and board member of MSPA Europe Africa. She joins us from Spain. In the previous segment, we looked at how banks respond to online customer reviews and how the banking marketing mix is reflected in that feedback. Now we'll look at the customer journey to see how successful this industry is in meeting customer expectations. From the moment a customer searches online or opens a banking app, through onboarding, daily transactions, and moments that require support or advice, every single touch point shapes how a bank is perceived. In a context where convenience is expected and alternatives are always just one click away, customers are not just looking for functional services, but they're also looking for experiences that feel clear, reliable, and well executed. So let's start with the customer journey. The banking customer journey begins even before an account is opened or a transaction is made. It starts with early awareness and research and digital discovery, onboarding experiences, ongoing relationship management, and trust-building moments of support. And each of those interactions, from logging into the mobile app and advisory sessions to problem resolution and proactive communication, shapes the customer's confidence and strengthens loyalty. This section outlines the 5 key stages of the customer journey, from awareness and consideration through conversion, retention, and advocacy. Across these stages, customers experience a series of pivotal touch points, each one offering the bank the opportunity to enhance satisfaction, reinforce trust, and nurture lasting financial relationships. You can see here on this diagram of the customer journey, the road that the customer journeys down. It starts at the top and starts with these specific stages and steps that the customer moves through until they arrive at the bottom of the road, which is the bottom of their destination. And we will go into this on the next slide, where we will see these same 5 stages across the top, and we'll discuss those in more detail. Here we can see those same 5 stages across the top. We have awareness, consideration, conversion, retention, and advocacy. Below that, we have columns that show us the individual steps inside of each stage. And inside of those, we can see the details for each of those steps, including the different touch points that the customer interacts with that bank. So for example, if we look at in the middle, the conversion, on the left-hand portion there is experience bank ambiance. That's our step. And this is where they observe the environment and comfort of the bank branch, and they engage with the digital platforms as well. And below that, you can see the different touch points from the interior of the bank branch to the mobile banking app itself and the online banking website. So we're going to take this customer journey, and we're going to take the online reviews that we have collected so far and analyzed, and we are going to plot the various customer sentiment aspects against the customer journey. We're going to see the portions of the customer journey where the customer believes that things are going well as those portions of the customer journey where sentiment shows that things aren't going so well, at least from the customer's perspective. We call this our moment of truth, which will show us very quickly and clearly and at a very quick glance what the overall customer experience is like for each of the different stages and steps in the customer journey. So before we jump into that, does anyone have any thoughts on which stages or which steps in particular are going to show great customer sentiment versus perhaps not so great customer sentiment?
Well, Eric, if I may jump in, I say that here we are talking about money, which means that anything that's related to issue resolution, if it goes slightly wrong, it will be a matter of dissatisfaction. So I would say that the tolerance for any issue resolution is very, very low. Mm-hmm. So my bet is that will be the weakest results.
And that would fall under the retention.
Yes, absolutely.
Yeah.
And there is no risk if you bet on retention as the worst performer based on all the industries that we have seen so far.
Yeah,
So,
we are talking before about regulation in Europe. It's so easy to change accounts because of the legislation around portability to close your accounts. It's so easy. You can open an account in your new bank, you close the old account for you. So it's so easy to change your bank nowadays. And you have the same in different markets as well. And you don't have to be stuck with your bank anymore. So I would say that is critical for customers nowadays.
mm,
Yeah, I agree with that. Okay, well, let's have a look at the moment of truth.
Yeah, see?
Okay, well, this is our moment of truth graph, and let's talk about what exactly we're looking at here. So the line on the graph displays the average customer sentiment throughout the customer journey. And across the top, you can see the different stages again, those 5 stages we've talked about before. And at the bottom, we can see the individual steps for each of those stages. So the line on the graph displays the average customer sentiment, and the gray highlighted area marks the standard deviation from the mean, which is the variance for each particular step. And that allows us to see where a broader spectrum of results were encountered. So the thicker the blob is, the wider the different collection of results landed. And in those cases, more precise CX measurement methods might be necessary other than just an ABSA analysis of reviews like what we did here. The size of the circles represents the frequency of aspects mentioned at each step. So the larger circles are talked about more often, and the smaller circles are talked about less frequently. So this helps to prioritize future areas to focus on. All right, looking at what we see here, the actual results, yeah, we definitely see the retention stage lacking, which, like you mentioned earlier, Emil, is something we've seen across a lot of different industries. This is an area where customer experience could definitely be improved to help banks retain their customers.
Yeah. And Eric, this is a great example of something that one client of mine shared a few years ago, that one of the things that are the most unfair strategies in banks is that the banks, they have very strong goals for salespeople in terms of targets. They have monthly targets for sales. And the moment the customer is in, it doesn't count any longer in terms of targets, in terms of prizes and incentives for managers. So there's much more incentives to bring more clients in than to retain clients. And we can clearly see here in this chart, one of the consequences that you have very good results in conversion and very bad results in retention.
Mm-hmm.
but what we see here is, and this is something that we have not seen, at least I cannot remember us seeing in previous industry studies. It seems to be big focus on the quality of the advisor consultation and many other steps of the journey, which are under complete control of the business, such as the ambience, such as the ability to research the services offered by the bank, even ongoing account servicing and issue resolution, which, okay, in retention, we expect to see low performance. This seems to be the rule across all journeys that we have seen so far. But things like ambience and research services, these should be easy to resolve. These shouldn't be let at that level of negative performance.
Yeah, that's surprising to me, seeing ambiance being such a low and somewhat often mentioned aspect there. But yeah, they seem to be doing very well.
But the positive aspect does not surprise me, because both in banking and telecom as well, they are known, and more than 25 countries where I have done customer experience projects, they are known to have strategies that are focused on new client strategy. So this is something that I'm not surprised, because they want to bring new clients in, and We can clearly see here in this graphic how this strategy is represented.
Mm-hmm. It's very interesting in that old saying of it's much more expensive to get a new customer than it is to keep a current customer.
Yeah, in the banking, we actually have research that shows that how many times clients are dissatisfied when they want to make an investment, and they see that the rates that are offered to new clients are much better than the same rates that are offered to existing clients.
Kerli, based on your research, what are your thoughts here with respect to that particularly low performing area of retention?
Mm-hmm. I think that retention is a long-term relationship based, built on the months of years of interaction, right? And I think that sometimes customers ask that, I do ask as well, like, why should I stay? We see sometimes that there are like promotions for the new customers. Take the telecommunication instance, that if you come, you get, better fees and so on. But what is offered for me, who I have been loyal for, I don't know, maybe 20 years, right? So I think that's one of the things to keep in mind here. And I also think that banks need to make sure that all gray areas are moved, so that whenever they talk with the customer, that it's clear that how the interest rates are calculated. It has to be a very simple language. The total cost has to be visible immediately, and so on, so that there is no possibility to misunderstand the whole situation. And retention is mostly built when something goes wrong, right? So then the customer really focuses on the details, and that creates this emotion and opinion of the bank or any other company in general. So I would actually suggest taking the ownership instead of transferring the customer between the departments, and their responding has to be fast, and the follow-up needs to be consistent, and so on, because in the end of the day, people remember how you handled these really difficult situations.
Mm-hmm. That goes back a bit to what we were talking about earlier about as automation increases, you will still have exceptions. And when those exceptions happen, it really matters to have someone who can come in and not only empathize, but is empowered to be able to fix those problems and handle it efficiently and turn it into a wow moment as opposed to a problem moment.
Exactly. Yeah.
Great. Okay. Well, for our next slide, we are actually going to drill into a little bit in the low sentiment here in that particular stage. That's the retention stage. And this chart highlights the main drivers of that negative sentiment that we saw in the retention stage. And from what we see here, the reliability of account support operations appears to be the main problem. At least that's what customers are complaining about the most, with 57% of the negative sentiment being specifically about that reliability of support. And it seems like this seems to match very well with what we were just talking about, where that it's that empowerment. You've got a problem, and can it be resolved consistently and efficiently and quickly every time? We do have some other particular pieces here that are also mentioned. We've got the service responsiveness and handling speed at 12%, account closure and fees at 8%, access and service infrastructure at 8%, communication quality at 7%, staff competence and effectiveness at 4%, and issue resolution and recovery at 4% as well. What it seems like overall, these are all very much tied into, can someone fix the problem, please? And this seems to be a great area for banks to target with respect to their customer experience so that they can maximize their customer retention. Now that we've looked at the customer journey, there's a few signals that stand out. Advisory remains the strongest moment for sure, and that personalized guidance from the financial advisor continues to build the highest levels of confidence, and banks should definitely reinforce that across the digital channel and the human channel. And at the same time, the expectations around the banking environment are not always met. I think that was an interesting one to see. Emil, like you pointed out, this is something that should be very easy for a bank to control. And the customers seem to value the clarity and comfort and security more than just the design. And they expect consistency across touch points. So that could be something to investigate further as well. We also saw trust weakening during the everyday account servicing, where things like inconsistent support and unclear communication can create friction over time. And finally, like we were just talking about on our previous slide, issue resolution remains the biggest challenge. So slow responses, perhaps unclear ownership, these types of things can quickly damage confidence, and that makes your account recovery difficult. And so you want to improve that and make that recovery faster and more accountable for the customer so they're more satisfied. To make sense of how all these different experience drivers play across the customer journey, we now move to our framework that connects what the customers talk about with when it matters in the process. This is the marketing mix funnel matrix, and Emil will walk us through this and show how it helps to pinpoint where those experiences might break down and where focused action can make the biggest impact. Because again, you can't fix everything all at once. You want to target what matters.
Thank you, Eric. So here we are going to try to make this more actionable. And what I mean is, we did dissect the results from the online reviews and ratings from multiple standpoints, from the viewpoint of the customer journey and from the viewpoint of the marketing mix. So what we'll do here is bring together these two viewpoints into one matrix that we call the marketing mix funnel matrix. And as you can see on the horizontal line, you see the customer journey stages. And on the vertical axis, you see the elements of the marketing mix. And inside this table, we see various red areas with percentages. These percentages represent the proportion of negative aspects identified for each intersection relative to the total number of all negative aspects analyzed. So if we take, for example, the consideration and people, which the intersection shows 18.6%, this means that of all negative sentiment, 18.6% was concentrated in this particular intersection between people and consideration. So what this helps us is identify the priority areas of intervention considering the marketing mix elements, and this is what the brand can control, relative to the customer journey stages or the perceptions of the customers. In this specific case, we see that the top 5, let's say, most important areas are with relationship to people. These are consideration, conversion, and retention. In relationship to process, these are the conversion and retention. And I would also add the place in the context of conversion. And this is not visible on this particular chart, but this is something that we saw on the customer journey. And we saw that the ambience was a very important talking point, and it managed to gather a lot of negative sentiment. So in this case, I would actually go beyond the top 5, and I will add a 6th intersection point, and this will be the place conversion. But nonetheless, how does it help us? So Online reviews and ratings are easy to gather because they are available online and they are relatively straightforward to analyze. And this is what we have done so far. But this is just one methodology, and the online reviews and ratings, the number of the online reviews and ratings are as much as they are. We cannot get customers to provide more online reviews and ratings simply because they will provide them when they feel like they want to provide them. However, what we can do is we can gather more data through additional methodologies. And the voice of the customer surveys is another methodology for gathering customer feedback, still from the standpoint of the customer perceptions. And this is a methodology that collects subjective data. These are the customer thoughts and feelings and perceptions. However, the issue with the voice of the customer surveys is that when we deploy this methodology, we need to be cognizant of the fact that the customer attention is very limited, and we need to ensure that we design the survey in a way that we minimize the number of questions and maximize the extent of the importance of the information that we collect with those questionnaires. So that is why we take the approach of what we call the starter voice of the customer survey. And the starter voice of the customer survey is a very small data collection survey form with consisting of 7 questions in total: a primary question, 5 key driver questions, and 1 closing question. The primary question is usually a question which is geared to cover the customer satisfaction. The closing question is usually a net promoter question. But the key challenge is how to design the key driver questions in a way that they measure the points, the touch points with the customer that matter the most from a customer standpoint. And that is why we utilize the mixed funnel matrix as a guidance in the selection of the key drivers and the drill down questions which follow up each key driver question. So let me explain that. Each key driver question, as you can see in a moment, is rated on 1 through 5 stars. And then if the key driver question is not answered with a very satisfied answer, and then we drill down into what constitutes the non-5 or very satisfied response in the key driver. And all these come from the analysis in the mixed funnel matrix, this intersection between the marketing mix and the customer journey. So let's see how we are going to utilize the mixed funnel matrix to identify the top key drivers. So we take the top 5 most important intersection point from a standpoint of negative feedback, and we extract the weakest performing steps in those. And this is the, if you look at the table underneath the mixed funnel matrix, the top 5 weakest performing steps are highlighted in red. These are the issue resolution and service recovery, greeting from the bank staff, financial product selection and account activation, ongoing account servicing and upselling, and consultation with financial advisors. Based on the online reviews and ratings, these were the weakest performing steps. And we're going to take those and build the starter voice of the customer survey based on what we have uncovered in the online reviews and ratings analysis. And the starter voice of the customer survey will look like this. We're going to start with a CSAT question. How satisfied are you with the brand? And then the first key driver question is going to be, how satisfied are you with the greeting and attitude of our staff? With drill down details as follows: no acknowledgement, unfriendly tone, rushed interaction, lack of attention, and impersonal approach. And again, these were derived from the online reviews and ratings that the customers have already given us. So we can relatively confidently assume that since the customers talk about the most about those drivers, we will get more information related to the interaction if we continue asking those questions. The second drill down question is, how satisfied are you with the consultation provided by your financial advisor? The third one is going to be, how satisfied are you with the process of selecting and activating your account? The fourth one is going to be, how satisfied are you with the support you receive when managing your account? And the last one is going to be, how satisfied are you with the way your issue is handled and resolved? So, in a nutshell, this is the starter voice of the customer survey that we suggest based on the online reviews and ratings. So the voice of the customer surveys give us additional leverage to collect more information and to dive deeper into issues and areas for improvement.
Thanks, Emil. Before we move on to our guest interview, we actually have a special bonus section with this episode. Kerli will share with us insights from a recent dive group study on the banking industry that will complement our findings in our discussion here. Christiane will lead this part of the conversation, and we're very excited to have this extra bonus section in today's episode.
Exactly, okay. So Kerli, thank you again for sharing this study with the CX channel community. Today, as I understand, we will focus in the overall findings, and the full results will be published in this month's magazine. These insights are very recent and come from a benchmarking study conducted across the Baltics, Lithuania, Latvia, and Estonia. Maybe could you start by telling us a bit about this study and its main objectives?
Well, we like to say in DIVE that we like benchmarking. I think that it gives very good understanding of the market. It gives a competitive advantage to the companies who buy the results. It also helps to drive attention, like a wider attention of how important customer experience is, and how we do it is that we also publish these results in media. And our media partner is asking the winners to comment it and how they are, working with customer service development and so on. And also very important that we give awards to the winners, and they use it in posting these proud posts they are having in social media, LinkedIn and so on. And they are also sometimes putting this information on their email signatures that according to DIVE benchmarking studies that they have the winners or on top 3 or so on. So this is how we do it, but of course the main thing is to give an extra layer for our customers to compare themselves with their main competitors. So that's why we run different sector surveys in a yearly basis, named like telecom, banking, pharmacies, gas stations, grocery stores, and so on. We have the specific questionnaire for each of them. So it's like not any of our customers' questionnaires, but kind of like sector average expectation for the customer service. And then, in a yearly basis, we run the studies and we give this kind of also trend view for the companies to see how the market is developing and how they are positioning in this bigger picture.
Fantastic. So what I understand, the study that we are presenting, it was conducted in October and November, 160 mystery shopping visits, 160 mystery shopping calls, and the brands later had the opportunity, if I recall correctly, that we explained to benchmark the results not only in the country level, but also in the sector, right?
Exactly. Yeah. So
Okay.
when we present the results to the customer, they get a different view. They get sector average view for the whole Baltics. They could also get local country average view, and then they get their own performance view. So they get the different views, and also if they're not on top, they also get additionally like a best performers view, so that they could compare themselves with the best ones and learn from that.
And Kerli, can you share with us what was the scenario that you implemented and why did you select mystery shopping to use as a methodology?
Mm-hmm. We chose the scenario which was opening the bank account. That was our view. Why to have it? Because that covers the whole journey of the customer interaction. But also, usually before we start the next year study, we also communicate with our customers from the banking sector and ask like their interests. So because their kind of focuses and interests can change as well. And one of the reasons also is that opening the bank account is kind of like a procedure which you can compare between the different banks easily, because it's quite standardized, right?
Correct. So let's move to some of the findings that we have in the study. The first one is about comparing the overall results by country in terms of calls. And what we have here is very high results. And I understand that you have presented awards for the top 3 performances in each country, right?
Exactly.
And you see here in the next presentation, in the next slide, that we also have very high results in terms of visits. The performance here is very high. And when results are very high, companies can be overconfident and think that the service is excellent, when in fact the opportunity is actually to raise the bar. What would you recommend in this case?
Yeah. That's a very interesting point that we have seen it happen actually also in mystery shopping studies, that at some point we reach the level of the results with the customer, that the customer starts to think that there is not much where to go, that we are basically almost excellent. Which in my opinion is absolutely wrong, because that shows that you have to raise the bar, and there are many ways how to do it, right? You can add more questions to go more into the details, or you can tweak the questions in a way that no, for instance, it's not maybe connected to the bank, but if there is a question that whether you were noticed or greeted during a minute, you can put it to a half a minute now, right? So you're raising like internal expectations, like so that's a very important thing what to do. And the other thing also from the action side or proactivity side, how to get to the next level is that there could be, for instance, a question that did the service giver ask you about, like, is there anything else I can help you with? And if you do that, you already get like your maximum score. to raise the bar now again might be that you just don't ask this simple question, but you go into details. For instance, in a banking, that you could say, oh, I can see that you have this pension collection here and you are like using this moderate solution, but I don't know, according to the 2 years results, we see that this, how we call it, like it's progressive, I think, not aggressive, but progressive, like an X level, that maybe that you could consider to move there, So it's like that you just don't ask that, can I help you with anything else, but you make suggestions based on the customer portfolio. So I think these are the things companies need to do when they are facing very high results. And this is actually something they're discussing now with our research team, that probably it will also happen with the banking sector survey, that we will raise a bar for the next year to see the more differences, that if you want more, if you ask more, to actually get more, or who provides more.
It's true. And when we look at these results, sometimes companies do not realize that it's very difficult, actually more difficult, to have this consistent high results or increase from 95 to 96% than it is to increase from even 70 to 8%, because it's much more difficult to keep the consistent and high results, right?
Yeah, absolutely true.
Okay, so moving to the next slide. How do you read these results in terms of Net Promoter Score evolution?
Actually, there are two aspects. Or one very important aspect is that not to look only at this Net Promoter Score like average results, but also read the comments behind it. Because what we see sometimes when we run different studies with companies is that when they do mystery shopping, and then they also do NPS or voice of customer, of course it is good if the results of the both study indicate the same things. But I think that it becomes interesting when NPS or voice of customer results or satisfaction results, like an old-fashioned way to do things, are lower than mystery shopping results, because then it shows that you do like that the frontliners are performing exactly as the leadership or top management asks for, but the customer expectation is something else. Their expectation is already higher, so that leads to the whole new circle. You have to go to your customer service standards and all other things to actually update everything. And so I think this is this interesting part here. I mean, results in general are good here, right? But like yes. I said, we should read between the lines and the comments to go deeper.
Exactly, and it goes perfectly in line with what we advocate here at the CX channel with the Synergistic CX methodology, that we need to combine different methodologies, because one methodology alone, even if it's excellent, it never tells the whole story.
Absolutely. And I think that it is very, very important to run this NPS type of service as well, because that you not that only that you get the data, but you also give a signal for the customers that you care and you want to hear about their opinion. But if the opinion doesn't satisfy you, then you have to go deeper with the different other research methods, including mystery shopping. Absolutely.
Exactly. So let's look at one more data here. And this is the last data that we have here, because the rest will be in the magazine. Kerli, if you would like to wrap up with your top recommendations here.
Well, to just wrap up, the thing is that for the leaders, I think it's very important, whatever study they are having, to have very clear goals, yeah, what they want to measure and what they want to get out of it. Because when you get this clear objective data, then you can make the action plan, yeah, and then you can actually move from just talking about it, actually making a change. So and follow up, and also extremely important, of course, the communication, because the whole team, the whole organization has to understand that where we stand and where we want to be after 3 months, 6 months, or a year.
It's true, it's a matter of creating real business impact. And your study, for what I have seen, it's really focused on that. And I'm really glad that our community have full access of the results in this month's magazine. So thank you again for sharing that.
Thank you.
So Eric, it's back to you.
Thank you, Kerli, very much for sharing that study with us. That was a very interesting bonus section. This is the end of part 2 of our 3-part episode here on the Synergistic CX Podcast, where we're focusing on the banking industry. In the next segment, we'll have a more in-depth discussion with our special guest, Kerli Zeiger Soosaar, CEO of Dive Group, regarding the customer experience in this industry and her CX expertise in general. Remember that you can download the details of today's industry study for free on our website, cx-channel.com. And you can also follow the CX channel here on LinkedIn, YouTube, or your other favorite social media to stay on top of each of our monthly podcasts. Be sure to press the subscribe button so you don't miss our next episode.